Sir, very happy morning to all. Sir, we are doing profits and gains of business or profession. Chapter Pgbp classified into 5 category. Number 1, deductions. Number 2, disallowance. Number 3, procedural aspects. Number 4, presumptive taxation. And number 5, 43 series. What is section 28? Section 28 lists down what are the income to be taxed under the head Pgbp. Correct? If you are having any profits and gains by doing business or profession, should be taxable under the head Pgbp. If you are getting any compensation or termination or modification of contract, should be taxable under the head. If you are a trade, professional or similar association, you are serving to the members. From that, if that trade, profession or similar association got any income, should be taxable under the head. Sir, if you are getting any income, sir, from the export profit, should be taxable under the head. Any gift or benefit or perquisite because of business or profession should be taxable under the head. There will be two characters, one is partnership firm, another is partner. Partnership firm will pay interest, salary, bonus, commission and remuneration to the partner. In the hands of the partner, it should be taxable under the head. If you get any non-compete fee, should be taxable under the head. Any sum received under the keyman insurance policy for an employer should be taxable under the head. Fair market value of inventory on the date of conversion into capital asset. That means you are having stock in trade, you have converted into capital asset, should be taxable under the head. Sum received when 35 AD asset is demolished, destroyed, discarded or transferred should be taxable under the head. That's it. Sir, we have to discuss what is speculation business. Not that much important, my lovable students. Just go through only. Speculation business should be treated separate and distinct business. Sir, you will be having normal business, you will be having speculation business. What Pgbp provision is saying that speculation business should be treated separately. Speculation business should be treated. So, under section 28, what is section 28? A speculation business must be treated as separate from other types of business. So, you will be having normal business, you will be having speculation business, you will be having specified business. Don't mix the speculation business with the other business. Sir, what is speculation business, sir? Speculation transaction involves a contract for purchase or sale of commodity including stock and share that is settled without actual delivery of what? Transfer. I am saying to you that I will purchase 100 shares and I am saying to you that I will sell 1000 shares. Like this, some contracts we will be entered without physically transferring the asset, without physically buying the asset. This is called as speculation business. So, speculation business should be treated separately. Further, if any of the company's activities involve buying and selling shares of other company, it is classified as speculative business. You are buying and selling shares of another company. It is a what activity? Speculative business. Exemption from speculative business classification, these and all. The following companies are not deemed to be in speculation business. Company whose gross income mainly comprise of income on interest on securities. Sir, I invested mainly in debenture of another company. That is not a speculation business. I am getting IFHP income only. That is not a speculation business. I am having only capital gain. That is not a speculation business. I am having only IFOS. That is not a speculation business. Company primarily engaged in, sir, trading in shares. Sir, my main aim is trading in shares. That is not a speculation. Banking company, not a speculation. Granting loans and advances is not a speculation, my dear lovable students. Then what is speculation? I am simply entering into a contract saying that I will sell this much shares in future or I will purchase this much shares in future. Then such a transaction or a business is called as speculation business. Transaction not deemed to be speculative. These and all are not deemed to be speculative. Number 1, hedging contract for raw material or merchandise. For example, I purchase raw material from foreign country or I have to pay settle in foreign currency. I am fearing that will the foreign exchange increase or not. Just to cover up that foreign exchange, I'm entering into a contract. That is not speculation. Are you agree with me? Or a hedging contract for stock and shares. I know that, sir, loss from price fluctuations in a dealer's or investor's stock holding. I am an investor. I have invested in one particular company. I'm feeling that that particular company's price may go down so much. So I am hedging myself, covering from that risk. That is not speculation. Then forward contract. Sir, it is a contract entered by the market or stock exchange members to prevent loss in transaction or jobbing or arbitrage. For example, I have to pay this much foreign currency to a foreign country, sir. So now itself I am entering into a contract saying that I need this much currency in future. That is not a speculation business. Trading in derivatives is not a speculation business. Trading in commodity derivatives is not a speculation business. These words and all are purely CA final topic, which is not there at our inter level. So it's very difficult to understand what this is all about. So commodity transaction tax required does not apply to agricultural commodity derivatives. What is the one-line summary at the inter level you are supposed to take care is speculation business should be treated separately. Speculation business in the sense means, my dear lovable students, sir, it is you are entering into a contract for purchase or sale of commodities and shares or securities in future. Because set off and carry forward provisions of the speculation business are different from normal. This much knowledge is more than enough. Section 28, computational section. Sir, how to compute the Pgbp? You have to start with a net profit as per P&L account. Add expense debited but not allowable. If these expenses has been debited to P&L account, should be in a back. Depreciation as per books of accounts, because depreciation as per income tax rules only will be allowed as deduction. Correct? Income tax debited to P&L account, which is as per 40 small a series. Any income tax debited to P&L account should be 40A subsection 1A disallowance. That is on any payment made to a resident on which TDS is liable to be deducted. No TDS has been deducted, or deducted TDS has not been paid to the credit of the central government, should be 40B disallowance for partnership firm, which is book profit, and also interest on capital in excess of how much percentage? 12%. 40A subsection 3 disallowance, that is cash payment exceeding 10,000 or as the case may be. Personal expenditure debited to P&L account should be added back. Capital expenditure debited to P&L account should be added back. Amortization, 4/5 of the expense, like 35D preliminary expenses, 35 DDA, VRS. If you debited 100%, only 1/5 will be allowed. Remaining 4/5 should be in a back. Any fine or penalty, because it's an infraction of law, as per section 37, it should be added back. All expenses relating to income not taxable under the head Pgbp. For example, local tax or municipal tax paid by the owner has been debited to P&L account, because that is an expenditure related to IFHP, not under the Pgbp. Should be in a back. Unless expense allowable but not debited to what? P&L. Sir, depreciation, even though we have added back depreciation as per books of accounts, we have to calculate the depreciation as per the income tax rules, and we have to reduce it. Income credited to P&L but taxable under the other head. Sometimes other heads of income will be credited to P&L. That has to be removed. For example, dividend income will be taxable under what? Agriculture income will be taxable under. Interest on security will be taxable under. Any capital gain, rent, that is income from house property. Casual income, gift, that is IFOS. And interest on what refund? IT refund. Add what income? Deemed income. Like, sir, bad debts recovered. We know that 41 subsection 4. Sometimes that bad debt recovered would not have been credited to the P&L account. So manually we have to add to the net profit. Are you really with me? And remission or cessation of trading liability under 41 subsection 1. That's it. You will be getting taxable profit as per Income Tax Act. If you see now, entire element of section 29 we have completed. Are you really with me? That's it. The chapter profits and gains of business or profession comes to an end. We have to go through the book back. 10 questions are there, my dear lovable students. We'll try to solve, sir, 4 to 5 questions in this slot, and we'll be having a discussion break, and we'll be continuing for the next one. Question number 1 is a target. These are past examination question or application area you should be able to apply. Mr. Venus engaged in manufacture. They are entitled for additional depreciation of pesticides, furnishes the following particulars relating to its manufacturing unit at Chennai for the year ended 31/3/2025. WDV of the plant and machinery on 31/3/2024. That means this in 23/24, 30 lakhs, right up. Depreciation, including additional depreciation for previous year 23/24, 4.75 lakhs. What we are supposed to do from 30 lakhs, we have to reduce 4 point, then only we will get the opening WDV. New plant and machinery purchased on 19, 10 lakh. New machinery purchased on 112, 8 lakh. So one is more than 180 days and other is less than 180 days. Computer purchased on 3/1, which is 40% block. How much lakh? 4 lakh. Additional information. All assets were purchased by account pay check. So depreciation is allowed. There is no disturbance of 40A subsection 3. All assets were put to use immediately. So from the date of purchase itself, we can start calculate the depreciation. New machinery purchased on 1/12/2024 and computer have been installed in office. That means not entitled for additional depreciation, only entitled for normal depreciation. During the year ended 31/3/2024, a new machinery had been purchased on 31/10/2023 for rupees 10 lakh. Additional depreciation besides what depreciation? Normal depreciation had been claimed thereon. So last year actually some asset has been introduced in the mid. For that they claimed only half of the normal depreciation and half of the, so the remaining half additional depreciation can be claimed in the current year. Are you really with me? Depreciation rate for the machinery can be taken at 15%. Assessee has no brought forward business loss or unabsorbed depreciation as on 1/4/2024. Compute the depreciation available to the assessee as per the provisions of the Income Tax Act and WDV of the different block of asset as on 31/3/2025. If we excise the option of shifting out of the default tax regime provided under 115 BAC subsection 1A, if they come out of the default tax regime, only they are entitled to claim the additional depreciation. Under the default tax regime, there is no concept of additional depreciation at all. And he paid tax under the default tax regime under section 115 BAC. Are you comfortable? So we'll be going through the answer, man. Look at here. Computation of WDV of block of assets of Venus Limited as on 31/3/2025. Two block will be there because two rate of depreciation. One is plant and machinery and computer. Because plant and machinery will be depreciated at 15% and computer will be depreciated at, participate, last year WDV as on 31/3/2024, plant and machinery how much like given? 30 lakhs and computer nothing was there, right up. Less depreciation including additional depreciation for last year is 4.75 lakhs given in the. So for our year opening balance as on 1/4/2024 is 25.25 lakhs. Are you really with me? Add actual cost of the new asset acquired during the year. Actually during the year two asset has been acquired. Machinery purchased around 19, 10 lakh. Machinery purchased around 112, 8 lakhs. Am I right, sir? New block has been opened during the year. Computer purchased around 31/1/2025. This is how much percent block? 40% block. It is not 15% rate of depreciation. That's why I am writing separately and creating a new block. Are you all really with me? So the WDV before depreciation subtotal will be 43.25 lakhs, which is nothing but 25.25 plus 10 plus 8. Are you able to appreciate? And here it is how much lakh? 4 lakh. Less assets sold or discarded or destroyed during the year. Nothing has been sales has been given. So WDV as on 31/3/2025 is 43.25 and 4 lakhs. Are you all really with me? On this WDV only we have to claim the depreciation. So can we start claiming depreciation? In that option number 1, if Mr. Venus exercise the option of shifting out of the default what regime? Tax regime provided under 115 BAC subsection 1A. In this case, since his income would be computed under the what tax regime? Optional tax regime. As per the normal provisions of the Act, he would be entitled for what depreciation? And also what depreciation? Subject to the fulfillment of the condition. That means if he is coming out of the default tax regime and if he is traveling through the optional tax regime, he is entitled to claim the, so computation of depreciation for assessment year 25-26. So this is for plant and machinery and this is for computer. Plant and machinery asset put to use for more than how many days? 180 days. Eligible for how much percent depreciation? 100% depreciation. Calculating calculated applying the eligible rate of normal depreciation and additional depreciation. Look at here, man. Normal depreciation I am going to calculate. Sir, what is the WDV of plant and machinery, which is comprises of, sir, opening WDV 25 point. Kandipa, that 25.25 crores will be more than 180 days because it is available from opening. Are you all really with me? So, calculator 25.25 into 15 percentage comes to 3.79 lakhs. Are you all really with me? Is the normal depreciation on the opening WDV. Now coming to the new machinery purchased on 19, is it more than 180 days or less than 180 days? So for that, the first purchase 10 lakh, you are entitled to claim how much percent? 15%. Since it is more than 180 days, you are entitled to claim 15%. So 10 lakh into 15% comes to 1.5 lakhs. Are you all really with me? So 3.79 plus 1.5 come to 5.29 is the total normal depreciation on opening WDV and also the new plant and machinery. Now coming to what depreciation? Additional depreciation. Hello sir. In that new machinery purchased on 19/2024, I am talking about this machinery. Hello sir. Sir, 10 lakh into how much percentage? 20%. Sir, they said that some machine has been installed in office. Which machine? New machinery purchased on 1/12/2024. So this machine is purchased in what? Office. Correct? Not the 19/2024, 1/12/2024. Correct, sir? So new machinery purchased on 1/12 and computer has been installed in the, so the second machinery is not entitled for the additional depreciation. So first machinery is entitled for the, so my dear lovable students, first machinery value is 10 lakhs. Is it more than 180 days or less than 180 days? So 10 lakh into 20%, 2 lakh can be claimed as additional depreciation. Last, is there any pending additional depreciation? Yes sir. Hello sir. So balance additional depreciation in respect of new machinery purchase on what date? 31/10/2023 last year. Okay, va? And put to use for less than how many days? 180 days. In previous year 23/24. That is last year 10 lakhs was the cost. So 10 lakh into how much percentage? 20% into 50%. Last year you would have claimed how much percentage? 10%. Last year you would have claimed 10% and balance 10 more percentage will be there, right up? Yes sir. Sir, so 10 lakhs into 10% will be how much lakh? 1 lakh. 1 lakh will be the additional depreciation we carry forward, which have to be claimed in the current year. Are you really with me? So total additional depreciation will be 2 plus 1 lakhs comes to how much lakh? 3 lakhs. That's it. We have taken care of, sir, more than 180 days assets comes to an end. Are you really with me? Coming to the asset put to use for less than how many days? 180 days. It is eligible for how much percent depreciation? 50% depreciation. Calculated applying the eligible rate of normal depreciation and additional depreciation, if any. Are you really with me? Sir, I am going to calculate the normal depreciation. You tell me. Is the opening WDV more than 180 days or less than, more than 180 days or less than 180 days? Opening WDV more than 180 days, less than 180 days? Yes sir. There are two additions are there to the asset, sir. In that the first asset more than 180 days, less than 180 days? More than 180 days. Second asset more than 180 days, less than 180 days? What is the value of the second asset? 8 lakh. So 8 lakh into how much percentage? 7.5% comes to 0.60. That is 60,000 is the normal depreciation for the second machinery, right sir? Coming to the computer purchased on 31/1. Actually, that is also less than 180 days only. Yeah. What is the cost of the computer? 4 lakhs. So 4 lakhs into actually 40% is the normal depreciation, but less than 180 days means 20%. So it comes to 80,000. Since the second machinery has been installed in office and computer also installed in office, it is not entitled for. So this will be the total, my dear lovable students. So the total depreciation will be A plus B plus C. A means the normal depreciation for the asset which has been put to use for more than 180 days. B means additional depreciation for the asset which is eligible. C means an asset which are less than 180 days. So total comes to 8.89 and 0.80. We are having note. This note are nothing, our provisions. As per 32 subsection 1 clause 2a, additional depreciation is allowable in case of new machinery or plant acquired and installed after 31/3/2005 by any assessee engaged inter alia in the business of manufacture or production of any article or thing at the rate of 20% of the actual cost of such machinery or plant. However, additional depreciation shall not be allowed in respect of inter alia, any office appliances or road transport vehicle that we already know, any machinery or plant installed inter alia what premises? Office premises. In view of the above provision, additional depreciation cannot be claimed in respect of machinery purchased on 1/2/2024 because it is installed in, and computer purchased on 31/1 because it is installed in. Fantastic. Balance additional depreciation at the rate of 10% on new plant and machinery acquired and put to use for less than how many days? In the year of acquisition, which has not been allowed in that year, shall be allowed in the immediately succeeding previous year. That's why we claimed the remaining 10%. Are you able to attach the discussion? Hence, in this case, balance additional depreciation at 10%, which comes to how much lakh? Being 10% of 10 lakh in respect of new machinery which had been purchased during the previous year when 23/24 and put to use for less than how many days? 180 days in that year can be claimed in previous year 24/25 being immediately succeeding previous year. Are you able to appreciate? That's it. This is the answer if he is traveling through the answer number 2. If Venus pays tax under the default tax regime under 115 BAC, nothing. He is not entitled to claim the. In this case, under the default tax regime under 115 BAC, he would be entitled only for normal depreciation, but not additional depreciation. My dear lovable students, computation of depreciation for assessment year 25/26. Asset put to use for more than how many days? 180 days. Eligible for how much percent depreciation? Calculated applying the eligible rate of normal depreciation. So normal depreciation, simple, the same, tuck. What was the opening WDV? 25.25 into how much percent? Same depreciation, no change. Sir, new machinery purchased on 19, which has been put to use for more than 180 days. Same 10 lakh into 15%, 1.5, same 5.29 because normal depreciation will not change. Here we don't have the B concept. Are you really with me? You are not entitled to claim the. Even the carry forward also will not be allowed. Are you really with me? Yes, sir. So the second part, asset put to use for less than how many days? Eligible for 50% depreciation. Calculator applying the eligible rate of normal depreciation. Right? So new machinery purchase 1/12/2024. That means 8 lakhs into 7.5%. This is normal depreciation. Correct? Same 0.6 and computer same 0.8. Are you really with me? If you add the normal depreciation for the asset which has been put to use for more than 180 days plus normal depreciation for the asset which has been put to use for less than 180 days, you will be getting the total depreciation. Are you all really with me what I am talking to you? That's it. Question number 1 comes to an end. A general normal section 32 question. Moving to illustration number 2. Mr. Abhimanyu is engaged in the business of generation and distribution of electric power. We all know that they are entitled for, he opt to claim depreciation on the WDV for income tax purpose. From the following details, compute the depreciation allowance as per the provisions of Income Tax Act for assessment year 25/26, assuming he has exercised the option of shifting out of the default tax regime provided under 115 BAC subsection 1A. If that is the case, my dear lovable students, then they are entitled for additional depreciation. WDV of the block 15% rate given 15 lakh, 50 lakhs opening WDV. Depreciation for the last year 23/24 7.5 lakhs. We have to reduce it just now we saw. Correct? New machinery purchased on 12/10 10 lakh. Sir, is it 12/10 more than 180 days, less than 180 days? From 12/10 to 31st of March, more than 180 days, less than 1 days. Less than. New machinery imported from Colombo on 12/4/2024. Okay, that means in our financial year. Machine had been used only in Colombo earlier and the assessee is the first user in India. Still, it is a second hand plant and machinery only. Are you all really with me? Yes, sir. Sir, it has been used in Colombo and then it has been imported, means already it has been used in where? Colombo. But if it is, sir, 35 AD specified business, 35 scientific research, it should not be by way of splitting or reconstruction. But 20% can be second-hand plant and machinery. There we have studied a condition that even it has been used outside India, then no problem. Sir, don't confuse with that. Section 32, such an exception is not there. If you are coming and saying to me that, sir, I married only in foreign country, I have not married in India, still you are a second-hand plant machinery only, come on. So my dear lovable students, so for this normal depreciation will be allowed, whereas additional depreciation will not be allowed. New computer 40% block installed in generation wing unit. Sir, generation wing unit means what? Entitled for additional depreciation, 2 lakh. All assets were purchased by account pay. Check. We have to calculate the depreciation. Shall we? Computation of depreciation under section 32 for assessment year 25-26. First, I am calculating normal depreciation. Depreciation at the rate of 15% on 51,50,000. Look at here. Sir, last year 50 lakhs is the WDV. Right, sir? And depreciation for the last year is 7,50,000. Am I right, sir? So 42,50,000 is the opening WDV. Correct, sir? Sir, here WDV as on 31/3/2024 of 50 lakh minus depreciation for previous year 23-24, last year 7,50,000. So from 50 lakh, if you reduce 7.5 lakhs, you will be getting 42.5 lakhs. This 42.5 lakhs has been put to use for more than 180 days. Plus machinery imported from Colombo is also more than 180 days. So plus how much lakh? 9 lakh. So 42.5 plus 9 lakhs comes to 51,50,000. That's how this figure of 5150 lakhs has been arrived. Are you able to appreciate? Being machinery put to use for more than 180 days, which is opening WDB 50 lakh, depreciation of the last year 7.5 lakh, plus purchase cost of imported machine 9 lakhs. Are you all really with me? That means, my dear lovable students, sir, totally 51,50,000 into 15% comes to 7,72,500 is the depreciation. Can I proceed, sir? Now, depreciation at 7.5% on 10 lakh being new machinery, because new machinery has been put to use for less than 180 days. So you are entitled to only 7.5%. So 10 lakhs into 7.5% come to 75,000. So 7,72,500 plus 75,000 comes to 8,47,500 is the total normal depreciation. Can I proceed, sir? With regard to plant and machinery, but you are having computer also, correct? Of rupees how much lakh? 2 lakh. You tell me, sir, is the computer in more than 180 days or less than 180 days? More than 180 days. So it is entitled for 40%. So 2 lakh into 40% comes to 80,000, my dear lovable students. So 8,47,500 plus 80,000 comes to 9,27,500 is the total for both 15% block and also the 40% block. Coming to the second part of calculation called as what depreciation. Now additional depreciation at the 10% of rupees 10 lakh, because this machinery of new machinery, since it is less than 180 days, not entitled for full additional depreciation, only 50%. So 10 lakh into 10% come to 1 lakh. Now the balance 1 lakh can be claimed in the next year. Next one, additional depreciation at the rate of how much percent? 20%. The new computer. Since a computer has not been installed in the office, computer has been installed in the generating of power, generation unit. It is entitled for, so 2 lakh into how much percent? 20% comes to, so 1 lakh plus 40,000 comes to 1 lakh. So the total depreciation on plant and machinery will be 10,67,500. Able to appreciate? We are having various notes. We will read together instead of you hearing. Come on. Mr. Abhimanyu is eligible for additional depreciation since he has exercised the option of shifting out of the default tax regime provided under section 115 BAC subsection 1A. The benefit of additional depreciation is available to new plant and machinery acquired and installed in power sector undertaking. Accordingly, additional depreciation is allowable in case of any new machinery or plant acquired and installed by assessee engaged inter alia in the business of generation, transmission or distribution of power at the rate of 20% of the actual cost of such machinery or plant. Therefore, new computer installed in generation wing unit eligible for what depreciation? At the rate of, since the new machinery was purchased only on 12/10, it was put to use for less than 180 days during the previous year. And hence only 10% is allowable as additional depreciation in assessment year. Balance additional depreciation will be allowed in the, however, additional depreciation shall not be allowed in respect of inter alia. Any machinery or plant which before its installation by SSE was used either within or outside India by any other person, because it will be counted as a second hand. Therefore, additional depreciation is not allowable in respect of imported machine since it was used in Colombo before its installation by the SSE. Comfortable, sir? That's it. These are the two questions available to revise section 32. I am moving into question number 3. From here onwards, we will be finishing. Examine with reason the allowability of the following expenses incurred by Mr. Manaf, a wholesale dealer of commodities under the Income Tax Act, while computing profits and gains of business or profession for assessment year 25-26. If he has excised the option of shifting out of the default tax regime provided under section 115 BAC subsection 1A. Construction of school building in compliance with CSR activity amounting to 5,60,000. So he has constructed school building in compliance with the CSR activity. Whether this amount can be debited to P&L account. As per section 37, CSR activity will never be allowed as a, look at the answer, man. Allowability of the expenditure incurred by Mr. Manaf, a wholesale dealer in commodity while computing Pgbp, case number 1. Construction of school building in compliance with CSR. Under section 37, subsection 1. Are you remembering 37.1? Only expenditure not being in the nature of capital expenditure or personal expenditure not covered under section 32 and incurred wholly and exclusively for the purpose of business or profession is allowed as deduction while computing what income. However, any expenditure incurred by an assessee on the activity relating to CSR referred in section 135 of the Companies Act shall not be deemed to have been incurred for the purpose of what or what. Hence, shall not be allowed as deduction under section 37. So, if you are spending any expenditure on account of CSR, it will be treated as you have not spent anything for the purpose of business or accordingly. The amount of 5,60,000 incurred by Mr. Manaf towards construction of school building in compliance with CSR activity shall not be allowed as deduction under section 37. Second part of the question. Purchase of building for the purpose of specified business of setting up and operating a warehousing facility for storage of what grain? Food grain. Amounting to how much? 4,50,000. Since he has shifted out of the default tax regime, 35 AD benefit will be available. Correct? He is entitled to claim 100% of the deduction, cost as deduction. So, purchase of building for setup and operating a warehousing facility for storage of food grain. Mr. Manav would be eligible for investment linked tax deduction under 35 AD. Since he has excised the option of shifting out of the default what regime, tax regime, provided under 115 BAC subsection, deduction under 35 AD would be how much percent? 100% of how much? 4,50,000. Being the amount invested in purchase of building for setting up and operating a warehousing facility for storage of food grain, which commenced operation on or after 1st April 2009. Therefore, deduction under 35 AD while computing business income of such specified business would be how much? If Manav opt for 35 AD. So, two conditions should be satisfied. Number 1, he should travel through the optional tax regime, and even though he is traveling through optional tax regime, he should say that I want deduction under what AD? 35 AD. Third question. Interest on loan paid to Mr. X, a resident of 50,000, on which tax has not been deducted. The sales for the previous year 23-24 is 202 lakh. Mr. X has not paid the tax, if any, on such interest. So, if you make any payment to a resident on which TDS is liable to be deducted, no TDS has been deducted or deducted TDS has not been paid to the credit of the 30% of the expenditure should be in a back. That's what the third part of the discussion. Come on. Interest on loan paid to Mr. X, 50,000 on which tax has not been deducted. As per section 194A, 194A is the interest other than interest on securities. Correct? Mr. Manaf, being an individual, is required to deduct tax at source on the amount of interest on loan paid to Mr. X since his turnover in the immediately preceding previous year exceeds 100 lakh, because hijacker benefit will not be applicable. In case of an individual or HUF, in the immediately preceding previous year, if the turnover does not exceed 1 crore in case of business or 50 lakhs in case of profession, They are not liable to deduct TDS in the current year. Hello, sir. Sir, which are 194H, 194I, 194J, 194A, 194C and 194? So therefore, rupees 15,000 being 30% of how much? 50,000 would be disallowed under 40A subsection 1A while computing the business income of Mr. Manav for non-deduction of tax at source under section 194A on interest of 50,000 paid by it for Mr. X. The balance 35,000 would be allowed as deduction under 36 subsection 1 clause 3 because interest on what capital? Borrowed capital. Assuming that the amount was borrowed for the purpose of business or profession. Can I move to the fourth item? Commodity transaction tax paid rupees 20,000 on sale of bullion. You tell me, sir, security transaction tax and commodity transaction tax can be debited too. So commodity transaction tax of 20,000 paid on sale of bullion. Commodity transaction tax paid in respect of taxable security transaction entered into in the course of business during the previous year is allowable as deduction, provided income arising from such what security? Taxable commodity transaction is included in the income computed under the head what? Profits and gains of business, or the only condition is the income from such commodity should be included as income under the head Pgbp. If that is the case, commodity transaction tax paid can be debited to the taking that income from this commodity transaction is included while computing the business income of Mr. Manav. Commodity transaction tax of 20,000 paid is allowable as deduction under section 36 subsection 1 clause 16. This we have discussed in section 36, applicable to all SSE. Are you able to connect it, sir? That's it. Illustration number 3 also comes to an end. Coming to illustration number 4. Examine with reasons for the following subdivisions whether the following statement are true or false having regard to the provisions of Income Tax Act. You have to say me true or false. For a dealer in shares and securities, security transaction tax paid in a recognized stock exchange is a permissible expenditure. Yes, sir. Look at the answer number 1. True. 36 subsection 1 clause 15 allows a deduction of amount of security transaction tax paid by SSE in respect of taxable security transaction entered into in the course of business during the previous year as deduction from the business income of a dealer in what and what? Shares in. Number 2, second question. Where a person follows mercantile system of accounting, an expenditure of 25,000 has been allowed on what basis? Accrual basis. And in later year, in respect of said expenditure, SSE makes a payment of 25,000 through what check? 25,000 can be the profits and gains of business under 40A subsection 3A in the year of payment. Yes, because accrual system, if you have claimed a deduction, in future when you are making the payment, you should make the payment by account pay check, account pay bank draft, electronic clearing system or such other electronic mode as may be prescribed. Otherwise, whatever amount you are paying will be treated as income under the head profits and gains of business or true. As per 40A subsection 3A, in case of SSE following what system? Mercantile system of accounting. If an expenditure has been allowed as deduction in any previous year, on what basis? Due basis, and payment exceeding 10,000 has been made in the subsequent year otherwise than by account pay check or account pay bank draft or use of ECS through a bank account or through such other prescribed electronic mode such as credit card, debit card, net banking, IMBS, UPI, RTGS, NEFT, BHIM, Aadhaar Pay, then payment so made shall be deemed to be the income of the subsequent year in which such payment has been. That means, one line summary, in current year I claimed an expenditure by accrual system. Next year I have paid by way of cash. The next year that income, that item will be treated as income. Comfortable? Case number 3. Is it mandatory to provide for depreciation under section 32 of the Income Tax Act while computing income under the head profits and gains of business or profession? Yes, it's true. According to explanation 5 to 32 subsection 1, allowance of depreciation is mandatory. Without claiming depreciation, you should not finalize profits and gains of business or profession. Because without claiming depreciation, Pgbp income will not be there. Therefore, depreciation has to be provided what? Mandatorily. While calculating income from what or what? Whether or not the SSE has claimed the same. While computing, it's what income? Total income. Comfortable? Mediclaim premium paid to GIC by Mr. Lomish for his employee by an account pay check on 27/12/2024 is a deductible expenditure under section 36. Yes, sir. This is not life insurance. This is what insurance? Mediclaim. True. Are you remembering? 36 subsection 1 class 1B provides deduction in respect of premium paid by employer to keep in force an insurance on the health of his home employee under a scheme framed in this behalf by general insurance company or any other insurance. The medical insurance premium can be paid by any mode other than cash to be eligible for deduction under 36 subsection 1 clause 1b already discussed. Under section 35 DDA, amortization of expenditure incurred under eligible VRS at the time of retirement alone can be done. No, it has to be claimed over a period of false expenditure incurred in making payment to the employee in connection with his VRS either in the year of retirement or in any subsequent year will be entitled to deduction in 5 equal annual installment beginning from the year in which payment is made to the employee. Comfortable? The last one. An individual engaged in trading activity and exercising the option of shifting out of the default tax regime provided under 115 BAC subsection 1A can claim additional depreciation under section 32 subsection 1 clause 2A in respect of new plant acquired and installed in what concern? Trading concern, where the increase in the value of such plant as compared to approved base year is more than 10%. Additional depreciation will be applicable only if you are engaged in the production or manufacture of any article or thing or generation or distribution of false. Additional depreciation can be claimed only in respect of eligible plant and machinery acquired and installed by assessee engaged in business of manufacture or production of any article or thing or in the business of generation or transmission or distribution of power. In this case, individual is engaged in what activity? Trading activity. A new plant has been acquired and installed in a what concern? Hence, he will not be entitled to claim what depreciation? Under 32 subsection 1 clause 2A, even though he has exercised the option of the shifting out of the default tax regime provided under 115 BAC subsection 1A. That's it. Question number 4 done. When I do all this question, generally what a student mindset will be, okay fine, whatever I am discussing, points are coming. I have to revise once again from start. Then if I connect, I will be able to appreciate. Nothing is new for me. To get the confidence, I have to revise multiple times. Are you really with me? Examine with reason allowability of the following expenses under the Income Tax Act while computing income under the head, sir, business or profession. Provision made on the basis of actuarial valuation for payment of gratuity, rupees 5 lakh. Provision for gratuity should be in a back. However, no payment on account of gratuity was made before due date for filing return. As per 40A subsection 7, it should be case number 1, not allowable as deduction. As per 40A 7, no deduction is allowed in computing business income in respect of any provision made by assessee in his books of accounts for payment of gratuity to his employee, except in the following 2 cases. These 2 cases it is allowed, where any provision is made for the purpose of payment of sum by way of contribution towards a approved what fund, or any provision is made for the purpose of making any payment on account of gratuity that has become payable during the what year. Therefore, in the present case, provision made on the basis of what valuation? What valuation? For payment of gratuity has to be disallowed under what section? 40A subsection 7. Since no payment has been actually made on account of, it is assumed that such provision is not for the purpose of contribution towards approved gratuity fund. Are you really with me? Provision for gratuity should be purchase of oil seed of rupees 50,000 in cash from a farmer on a banking day. It is covered in rule 6DD, allowable as deduction. As per rule 6DD, in case payment is made for purchase of agricultural produce directly to the cultivator, grower or producer of such agricultural produce, no disallowance under 40A subsection 3 is attracted, even though cash payment for the expense exceed 10,000. Therefore, in the given case, disallowance under 40A subsection 3 is not attracted since cash payment for purchase of oil seeds is made directly to the farmer. Comfortable, sir? Coming to case number 3. Tax on non-monetary perquisite provided to an employee 20,000. Can it be debited to P&L? No, sir. Should be in the back. Not allowable as deduction. Income tax of 20,000 paid by employer in respect of non-monetary perquisite provided to its employees exempt in the hands of employee under section 1010. As per 40A clause 5, such income tax paid by employer is not deductible while computing the business income. Comfortable? Payment of rupees 50,000 by using credit card for fire insurance. Allowed because it's a what expenditure? business expenditure. Allowable as a payment for fire insurance is allowable as deduction under 36 subsection 1. Since payment is made by credit card, which is a prescribed electronic mode, disallowance under 48 subsection 3 is not attracted in this case. Case number 5. Salary payment of 10 lakh to Mr. X outside India by a company without deduction of tax, assuming Mr. X has not paid tax on such salary income. 100% it should be in a back. Are not allowable as deduction. Disallowance under 48 subsection 3 will be attracted in respect of salary payment of rupees 10 lakh outside India by a company without deduction of tax at source. Are you able to match it? Payment made in cash 30,000 to a transporter in a day for carriage of goods allowed, because up to how much allowed? Allowable as deduction. The limit for attracting disallowance under 48.3 for payment otherwise than by account pay check or account pay bank draft or use of ECS through a bank account or through such other prescribed electronic mode is 35,000 in case of payment made for plying, hiring or leasing of. Therefore, in the present case, disallowance under 48 subsection 3 is not attracted for payment of 30,000 made in cash to a transporter for carriage of goods. Are you comfortable? Moving to question number 6. Examine with reason whether the following statement are what or what. With regard to provisions of Income Tax Act, payment made in respect of business expenditure incurred on 16th February 2025 for rupees 25,000 through a crossed check which is hit by the provisions of 48 subsection 3. Allowed or disallowed? Disallowed. Is the statement correct? What they are saying, payment made in respect of business expenditure incurred on 16th February for rupees how much? Through a what check? Is covered under 48.3 they are saying. Will not be covered, Covered, sir. Statement is true, sir. Are you really with me? They are saying that if you make payment of 25,000 through crossed check, provisions of 48 subsection 3 will be applicable. Will it be applicable? Yes, sir. English. Read it once again. Payment made in respect of business expenditure incurred on 16th February for rupees 25,000 through a what check is hit by provision 48.3 will be applicable nu solranga. Will be applicable. Applicable, sir. In order to escape the disallowance specified under 48.3, payment in respect of business expenditure ought to have been made through an account pay check. Payment through a crossed check will attract disallowance under 40A subsection 3. Comfortable? Sir, the second one. It is a condition precedent to write off in the what of accounts, books of accounts, that the amount due from debtor to claim deduction for bad debt. In order to claim bad debt as a deduction, mandatorily bad debt should be written off in the books of accounts is a condition. True or false, sir? True, sir. It is mandatory to write off the amount due from debtor as not receivable in the what of accounts, books of accounts, in order to claim the same as bad debt under 36 subsection 1 clause 7. However, where the debt has been taken into account in computing the income of assessee on the basis of what? ICDS, notified under 145.2 without recording the same in the accounts, then such debt shall be allowed as previous year, in which such debt become irrecoverable, and it shall be deemed that such debt or part thereof has been written off as irrecoverable in the accounts for the said purpose. Generally, in order to claim bad debt as a deduction under 36 subsection 1 clause 7, mandatorily, my dear lovable students, you have to write off in the books of accounts. But as per ICDS, if you declare any income and you pay tax, after you pay tax, that receivable become irrecoverable, even though you have not debited to the P&L account, even, sir, that item can be claimed as a deduction. The last point I am coming. Failure to deduct tax at source in accordance with the provisions of chapter 17b inter alia from the amount payable to a non-resident as rent or royalty will result in disallowance while computing the business income, where the non-resident payee has not paid the tax due on such income. Yes, it is true. 40A subsection 1 provides that failure to deduct what at source? Tax at source, inter alia, rent or royalty payable to a whom? Non-resident, in accordance with the provisions of chapter 17b, will result in disallowance of such expenditure where the non-resident payee has not paid the tax due on such income. Able to appreciate, sir? Illustration number 7, sir. By this illustration, I will be pausing and will be doing the remaining in the coming slot. Mr. Shivam, a retail trader of Cochin, gives the following trading and P&L account for the year ended 31st March. Sales given, closing stock given. Sir, opening stock, purchases GP given. income from UTI has been given. This income has to be taxed under income from. So because of crediting this income to the P&L account, net profit would have been increased. Should not be increased. Should reduce it. Correct? Salary allowed, rent and rates allowed, interest on loan allowed, depreciation allowed, printing and stationery allowed, postage and telegram allowed. Loss on sale of shares is short term. This is with regard to capital gain. Should be added back. Other general expense, net profit allowed. I will have to always start with the additional information. It was found that some stock were omitted to be included in both opening stock and closing stock. Value of which are follows. Opening stock 9,000 has not been recorded. Closing stock 18,000 has not been recorded. If I include 18,000 in closing stock, GP will increase. If GP increase, NP increase. So I have to add 18,000. If I include 9,000 in opening stock increases, GP reduces, net profit reduces. So I have to reduce 9,000. So I have to add 18,000 and I have to reduce 9,000. Comfortable? Salary include rupees 10,000 paid to his brother, which is unreasonable to the extent of what? 2,000. So here salary is there. Look at here. Salary 60,000 is there. Inside the 60,000, 10,000 paid to the brother. In that 2,000 is unreasonable means you have to add back that 2,000 as per 40A subsection 2 related party transaction. Comfortable? Whole amount of printing and stationery. Look at printing and stationery 23,200. Okay, wow. Was paid in cash by way of one-time payment to Mr. Ramesh. You should add back as per 40A subsection 3. Cash payment exceeding 10,000 or depreciation provided in the P&L was 1,05,000 was based on the following information. The opening balance of plant and machinery, that is WDV as on 31/3/2024 minus depreciation for previous year is 4,20,000. So they said that 4,20,000 is the opening WDV. Okay, wow. A new plant falling under the same block of depreciation was bought on 1/7/2024. Even that is also more than 180 days. For how much? 70,000. Two old plant were sold on 110 for rupees 50,000. So I have to reduce minus 50,000. Comfortable? So 4,20,000 plus 70,000 minus 50,000 comes to 4,40,000 is the amount eligible for depreciation. Into, since this is plant and machinery, hello sir, 15% comes to 66,000. Correct, sir? Yes, sir. And are they entitled for what depreciation? Additional depreciation. That we have to check that whether they are traveling through the what route or not. Retail trader, optional tax route or not, they are traveling. We have to check. Rent and rates include GST liability of 3,400 paid on 7/4/2025. Any tax, duty, cess or fees payable before filing the return of income has to be paid. They paid on April itself. No problem at all. Other general expense include 2,000 paid as donation to a public charitable trust. Donation to a public charitable trust is not a business expenditure. Should be in a back. That can be claimed as deduction under 80G that we will come at the appropriate time. You are required to compute the profits and gains of Mr. Shivam under the presumptive taxation under 44 AD. Look at the sales figure, man. It is only 1 crore and 12 lakh, which is less than 2 crore. Because up to 2 crore, you can travel through the presumptive taxation. Am I right, sir? And profits and gains as per the regular provisions of the Act, assuming yes, exercise the option of shifting out of the default what regime, tax regime, provided under 115 BAC subsection. Assume that the whole of amount of turnover received by what paycheck or use of electronic clearing system through bank account during the previous year, then the presumptive rate will be 6%. Are you really with me? So I am first doing the normal route. Computation of business income of Mr. Shivam for assessment year 25-26. You look at the question and tell me what is the net profit. You are having question, tak respond. Add inadmissible expense or losses. Undervaluation of closing stock. How much rupees, sir? Because if I include closing stock, net profit will increase. Correct? And less undervaluation of opening stock. I have to reduce 9,000. Clear? Salary paid to brother unreasonable should be added back as per 40A subsection. Printing and stationery, whole amount of printing and stationery paid in cash would be disallowed. Since such amount exceeds how much? 10,000 as per 40A subsection 3. Comfortable? Depreciation. They have not calculated depreciation as per section 32. They have calculated as per their ishtam. So hence first that has to be in the back. And we have to calculate the depreciation and we have to reduce the depreciation. Are you really with me? We calculated depreciation. We got how much? That 66,000 should be reduced. Are you all really with me? Short-term loss should not be debited to what account? P&L account. Should be enna back. Donation to public charitable trust is not a business expenditure. Hence should be enna back. So you will be getting subtotal, my dear lovable students. From the subtotal, I have to reduce the item to be deducted under valuation of what stock? Opening stock. And income from UTI, because it has to be included under the head. Because of crediting this income in the P&L account, net profit would have been increased. Correct? So my dear lovable students, 2,400. Business income before depreciation. Business income before, you will be getting 1,96,900. From that, have we already calculated depreciation? How much? 60. So total comes to 1,30,900. Are you all really with me? So computation of business income as per section what? AD. Sir, as per 44 AD, where the amount of turnover is received inter alia by way of account pay check or use of electronic clearance system through bank account or through such other prescribed electronic mode, the presumptive business income will be 6% of the turnover. Are we right, sir? So 1 crore 12 lakh 11,500 into 6 by 100 comes to 6 lakh 72,690 is the presumptive income. Whereas PGBP is 1 lakh 30,900. Are you really with me? Look at how we have calculated the depreciation. Opening balance, they themselves given us 4 lakh 20,000. Addition is 70,000. Total comes to 4 lakh. There is a sale to the extent of 50,000. So the WDV will be 4 lakh 40,000. And 15% depreciation come to 60. No additional depreciation is allowable as assessee is not engaged in the manufacture or because he's a trader. They already mentioned in the question. So they are not entitled for, since GST liability has been paid before the due date of filing return under 139(1), the same is deductible, comfortable. Sir, they don't ask, choose, sir, whether the normal route or the presumptive route. They don't want. They just ask you to calculate the income under the presumptive route. Actually, under presumptive route, you are having 6 lakh odd. But under the normal route, you are having 1,30,000. Better declare less than 6%. Compulsory maintain books of accounts. Under section 44, compulsory do a tax audit. Are you really with me? Otherwise, you have to declare 6,72,690 as the income. Are you really with me? Anyway, you are already maintaining books of accounts. That's why you are having profit and loss account. Without books of accounts, how P&L account will come? So, since you are already maintaining books of accounts, sir, continue that and declare a profit less than the presumptive income, which is how much percent? 6%. Don't adopt what? 6%. And you say that for next 5 years, I don't want the presumptive income at all. Are you really with me? Sir, this is how the provisions, what we have studied, will be tested in examination. This is ICI study material book back question. When you are studying the chapter itself, when you are doing that question, you will be able to appreciate or understand the expectation of the examiner. Hello, sir. What you are supposed to do now is, I can complete the next 3 questions also in one stretch, which is only question number 8, which is 44 AE only. Then question number 9, again a P&L account question. Then question number 10. These are the questions we are having, my dear lovable students. But I want you take a 1 hour study time of the entire PGBP, revise the provision and be thorough the initial parts and redo first 7 questions, whatever we have done. Then come back, we'll be doing 8, 9 and 10. You will be feeling a fantastic satisfaction with the profits and gains of business or profession. Are you all really with me? I am with you, sir, from your heart. Anybody is there? Where is a grand clap? I am waiting for your quick revision and come back. Sir, very happy morning to all. Sir, we are doing the back of the profits and gains of business or profession. In that, in the last class, we have done up to question number 7 and I am moving into question number 8. Mr. S is engaged in the business of plying goods carriage. We know that section 44 AE is there, which is plying, hiring and leasing of goods carriage. On 1st April 2024, he owns 10 trucks. That is allowed because an assessee can own up to 10 trucks at any time during the previous year. Out of which 6 are heavy goods vehicle. The gross vehicle weight of such trucks is 15,000 kg each. That means 15 ton. anything more than 12 ton is heavy goods vehicle. On 2nd May 2024, he sold one of the heavy goods vehicle and purchased a light good vehicle on 6th May 2024. Basically exchanged. This new vehicle could, however, be put to use only on 15th June. That doesn't matter because it's the taxability will not start from the date of put to use. Taxability will start from the date of owning. Compute the total income of Mr. S for assessment year 25-26, taking note of the following data. Freight charges collected 12,70,000. That means from the general public, 12,70,000 has been collected. Plus operational expenses 6,25,000. That means he is maintaining books of accounts. That's why he is able to say what is the total. Depreciation as per section 32, 1,85,000. Other office expenses 15,000. Total 8,25,000. Net profit 12,70,000 minus 8,25,000 comes to 4,45,000. Other business and non-business income comes to 70,000. So he is having the option to travel through section 44 AE, correct? 44 AE would apply in case Mr. S, since he is engaged in the business of plying goods carriage and owns not more than 10 goods carriage at any time during the previous year. Section 44 AE provides for computation of business income of such assessee on a what basis? Presumptive basis. Income shall be deemed to be how much per ton? 1,000 per ton of gross vehicle weight or unladen weight, as the case may be, per month or part of the month for each heavy goods vehicle. That means if the vehicle is a heavy goods vehicle, it is ton based, correct? And if the vehicle is a light goods vehicle, it is month based, which is 7,500 per month or part of the month for each goods carriage other than heavy goods vehicle owned by the assessee in his return of income. Mr. S business income calculated applying the provision of 44A is 13,72,500 and his total income will be 14,42,500. How, sir? Because you just think how many trucks he is having? 10 trucks, out of which 6 are, so 10 trucks classified into two category. Number 1, 6 and 4. 6 are heavy goods vehicle and 4 are other than heavy goods vehicle. Right, sir? Sir, 6 are owning from 1st of April. Correct? In that, out of which 6 are heavy goods vehicle, the gross vehicle weight of such goods vehicle is 15,000 kg each. On 2nd May, he sold one of the heavy goods vehicle and purchased a light goods vehicle on 6th May. So out of this 6, he was owning 5 till the end and 1 he sold. That means for this 5 heavy goods vehicle, for every ton or part of the ton, hello sir, the presumptive income will be 1,000 into 15 tons into 12 months into 5 vehicles. Are you already with me? So 1,000 per ton into how much ton? 15 ton. That means 15,000 per vehicle per month. For how much months? 12 months. That means for one vehicle, 1,80,000. Like that, how many vehicles you are having? 5 vehicles. So the presumptive income will be 9 lakhs. Whereas one of the heavy goods vehicle, he has sold in which month? May month. So whether per month or part of the month, even though you have sold in May, you are entitled to declare it as an income. So 1,000 into 15 ton into 2 months into one vehicle. Are you able to appreciate? So 1,000 into 15 into means 15,000 into 2 months means 30,000. So 30,000 is a presumptive income. So total 9,30,000 is the total income to be declared. Are you able to appreciate? Comes to other than what goods vehicle? Heavy goods vehicle. It is what based? Month based. Correct? Actually in starting you are having only 4 other than heavy goods vehicle. But you purchased one more heavy goods vehicle. Right, sir? So for that 4, Then we will calculate 7,500 into, sir, 12 months into 4 vehicle. Am I right, sir? So for every vehicle, 7,500 into 12 comes to 90,000. Into 4 means 3,60,000 is the presumptive income. Coming to the one vehicle, which we purchased only on May. That means 7,500 into 11 months, because April will be out, correct? Into one vehicle. So 7,500 into 11 comes to 82,500. So 3,60,000 plus 82,500 comes to 4,42,500 is the presumptive income from the other than heavy goods vehicle. So total presumptive income will be 9,30,000 plus 4,42,500. Are you really with me? Comes to 13,72,500 is the total what income. This is what? 13,72,500. We have derived that. Are you really with me? In addition to that, question said that he is having other business and non-business income. Comes to how much? So to this 13,72,500, if you add 70,000, you will get 14,42,500. Hello, sir. This is what the presumptive route is all about. However, as per 44AE subsection 7, Mr. S may claim lower profit. If he feel that this presumptive income is much higher, he can declare lower profit. And if he keep and maintains proper books of accounts as per section 44A and gets the same auditor and furnisher report of such audit as required under section, if he do so, then his income for tax purpose from goods carriage would be rupees 4,45,000. They themselves given as per P&L account, as per books of accounts, it is only 4,45,000. Are you all really with me? But that 4,45,000 is less than the presumptive income of 13,72,500. But still, no problem. You have to just maintain the books of accounts and you have to just do the tax audit. Are you all really with me? Instead of 13,72,500. And his total income will be, if he is traveling through the normal route, if he is saying that I don't want the presumptive taxation, then 4,45,000. Hello, sir. Plus 70,000 is the other income, comes to 5,15,000. Are you really with me? So computation of total income of Mr. S for assessment year 25-26. This is presumptive income. Presumptive income means section 44 AE, and where books of accounts are maintained. That means normal route. That means he is saying that I don't want the presumptive income. I am not interested to travel through the 44 AE route. Are you really with me? So income from business of plying goods carriage 13,72,500. Are you able to appreciate? But if you are traveling through the normal route, it is only 4 lakh, and other business and non-business income comes to 70,000. Both the route, it is 70,000. Can I proceed? So total income will be 14,42,500 and 5,15,000. Are you really with me? They calculated the presumptive income as per 44 AE, as per table approach. For a heavy goods vehicle, they have calculated, and for goods vehicle other than heavy goods vehicle also they calculated. Even we also got 13,72,500. Able to appreciate every nook and corner of the question. I am moving to question number 9. Like this, only an expected question will be coming from the profits and gains of business or profession. Full-fledged question. Mr. Raju, a manufacturer is entitled for, at Chennai, gives you the following manufacturing, trading and P&L account for their under 31.3. Sales has been given, closing stock also has been given. To opening stock given, purchases of raw material given, manufacturing wages and expense given, and gross profit has been given. By gross profit given, by dividend from domestic company should be taxable under the head income from other sources. If you credit to the P&L account, PGBP income increases, correct? It is wrong. So it has to be reduced from the net profit and should be included under the head. By income from agriculture, agriculture income should be taxable under the head because of crediting the P&L account. My dear lovable students, sir, net profit increases. It should not happen. So remove from the P&L account and should be included in the IFOS. To administrative charges, no problem. Generally, it is allowed. To SGST penalty, penalty should be in the back because infraction of law should not be allowed as a deduction. GST paid 1,10,000, generally allowed. General expenses 54,000, generally allowed. Interest on bank on machinery term loan 60,000, generally allowed. You have to check that whether it is still payable as per 43B. Implication you have to see. Depreciation, if it is as per income tax rules, then it is allowed. Otherwise, if you yourself calculated some amount as depreciation, then should be added back and calculate the depreciation and reduce that amount. Comfortable? We have to start with the net profit as per P&L account. These are the additional information. Following are the further information relating to financial year 24-25. Administrative charges include 46,000. If you see the administrative charges, 3,26,000. This include how much? 46,000. Paid as commission to brother of the assessee. Brother is a related person. Commission amount at the market rate is only how much? So 46,000 minus 36,000 means 10,000 extra should be in the back. Added back as per section 40A subsection 2. What party transaction? Assessee paid rupees 33,000 in cash to a transport carrier on 29/12/2024 allowed, because to a GTA you can pay up to, this amount is included in the what expenses? The manufacturing wages and expense. This include cash payment of 33,000, no consequences, no problem, right? Assume that provisions relating to TDS are not applicable to this payment. Okay, then no problem. Since TDS is not applicable, we are not liable to deduct the TDS. TDS consequences will not come. TDS, a sum of 4,000 per month was paid as salary to a staff throughout the year, and this has not been recorded in the, so you have paid 4,000 into 12 comes to 48,000, but this has not been debited to the what account? P&L account. If this has been debited, net profit would have been reduced, correct? So we have to manually reduce the what profit? Net profit. Bank term loan interest actually paid up to 31/3/2025 was only 20,000 and balance was paid in November 2025. That means total interest on bank loan is 60,000, correct? Of that 60,000, you are having 20,000 and 40,000. This 20,000 has been paid. Since it has been paid, no 43B disallowance. Are you already with me? But this 40,000, since it has not been paid, it should be added back as per section 43B. Housing loan principal repaid during the year was 50,000 and it's relating to residential property acquired by him in previous year 23-24 for what occupation? Self-occupation. Interest on housing loan was how much? Housing loan was taken from what bank? Canara Bank. These amount were not dealt with the P&L account. So these amount were not debited or credited in the P&L account. But these informations are required in order to find out income from house property. Correct? Depreciation allowable under the Act to be computed on the basis of the following information. This is how you are supposed to compute the depreciation. WDV as on 31/3/2024, last year WDV, minus depreciation for the last year, opening WDV is 11,90,000. Addition during the year, used for more than 180 days is how much lakh? Total addition during the year is 4 lakh. That means out of 4 lakh, if 2 lakh is more than 180 days, automatically balance 2 lakh is less than compute the total income of Mr. Raju for assessment year 25-26, assuming he pay tax under the default tax regime, not the optional tax regime. They want the total income. They want the not the Pgbp alone. Ignore application of 14A for disallowance of expenditure in respect of any exempt income. So they are saying that no need to see section 14A. We'll explain section 14A in basics. In this question, there is no implication. Shall we start the proceedings? Computation of total income of Mr. Raju for assessment year 25-26. Profits and gains of business or profession. We have to start with net profit as per P&L account. Look at the question and tell me, don't see the answer. What is a net profit as per P&L? Add excess commission paid to brother. Disallowed under what section? 40A subsection 2. How much extra? Next one. Disallowance under 40A3 is not attracted since the limit for one-time cash payment is how much? In respect of payment made to what operator? Therefore, the amount of 33,000 paid in cash to a transport carrier is allowed as a deduction. Are you feeling comfortable? Next one. Bank term loan interest paid after the due date of filing return of income under 139 subsection 1 should be disallowed as per section 43B. So out of 60,000 debited, 20,000 has been paid. Remaining 40,000 should be state GST payable. Paid should be what? Penalty paid should be what? Disallowed. Because it is infraction of law. Infraction of law is not allowed as per 37 subsection 1. Hence that 5,000 should be in the back. And I have to first add back the depreciation debited to the P&L account. Because, my dear lovable students, that is not the depreciation as per income tax rules. Correct? And I have to separately calculate the depreciation as per income tax rules. And that amount has to be reduced. So the subtotal comes to 7,55,000. Comfortable? Less dividend from what company? Domestic. Why are you reducing this, sir? Because this has been credited to the, because of that Pgbp would have been increased. This income is actually taxable under the head income from, so chargeable to tax under the head IFOS. Because of that, I am reducing 15,000. Can I proceed? Income from agriculture exempt under section 10(1). That is not a Pgbp income. Agriculture income should be taxable under the head IFOS. Hello, sir. So it has to be reduced first from the Pgbp and it has to be included in the head. But that income is exempt income. That income is what? How 1010 gratuity exemption, 1010A pension exemption, the same way 10 subsection 1. In India, if you earned any agriculture income, it is fully exempted. Are you really with me? Next one, salary paid to staff not recorded in the what? Books. If you have debited that expenditure in the what account? P&L account, net profit would have been. So I am giving the effect for reduction in the net profit. Assumed it was an erroneous omission. And the assessee has offered satisfactory explanation for the same. In such a case, same would be allowed as deduction while computing profits and gains of business, or that's why 48,000 I am reducing. Now I have to calculate the depreciation, right, sir? How to calculate the depreciation, sir? For opening WDV of 11,90,000, I am entitled to claim 15% depreciation, right? Because 11,90,000 into 15% comes to 1,78,000. And you are having two addition, my dear lovable students. 2 lakh is more than 180 days. So 2 lakh into 15% comes to, and one more 2 lakh is there. 2 lakh into 7.5%. Am I right, sir? Comes to 15,000. Are you all really with me? So 1,78,500 plus 30,000 plus 15,000 comes to 2,23,500 is the allowable depreciation. And Sir, new, sir, addition during the year they said, correct? What is doing? Manufacturing at Chennai. So, is entitled for what depreciation? Additional depreciation. Can we calculate additional depreciation? That's what I am, sir, going to say. Additional depreciation is applicable only if you travel through the optional tax regime. Additional sir, depreciation is not available if you travel through the. So every question don't calculate without noting that point. Are you really with me? So the eligible depreciation is 2,23,500. Are you comfortable? That's it. You are done with the profits and gains of business or profession. You will be getting 2,88,500. You just tell me what is the net profit as per P&L? 5 lakh. But what is the correct taxable profit? 2,88,500. Because unnecessary income and all credited to the P&L account. Because of that, Pgbp has shoot up. So we have eliminated the impurities from the P&L account and we have purified the P&L account to get only the Pgbp income. Comfortable? The next one, I am moving into the next set of income. That is income from what property? House property. Sir, is that house property, you tell me, self-occupied property or let-out property? Self-occupied property. If it is a self-occupied property, such a concept is not there in the default tax regime, correct? Because 24B is not allowed. If 24B is not allowed, under the default tax regime, such a concept itself is. So annual value will be nil. Less deduction under 24B. Interest on housing loan not allowable since Mr. Raju is paying tax as per what tax regime? That's it. So IFHP will be nil. Shall we finalize the IFOS? Dividend from domestic company will be taxable under the head income from. So you will be getting gross total income. What total income? Which is nothing but income from salary plus income from house property plus profits and gains of business or profession plus capital gain plus IFOS is called as what total income. But for this assessee, income from salary is 0 and even income from house property is also 0. We calculated Pgbp. There is no details of capital gain and he is having some IFOS. So technically speaking, Pgbp plus IFOS gives the what total income. Less deduction under 80C. Sir, once you travel through the default tax regime, you are not entitled to claim chapter 6A deduction. So nil. So the total income is 3,03,000 and even they have also, sir, calculated the depreciation. They also got 2,23,500. Have we got? Since Mr. Raju is paying tax as per what tax regime? Additional depreciation under 32 subsection 1 class 2A would not be available to him. Here you can have alternate views. It is also possible to take a view that salary paid to staff not recorded in the books is in the nature of unexplained expenditure and hence would be deemed to be the income as per 69C. We have not discussed what is 69C for the time being. We will be discussing in the chapter what? IFOS. So don't worry. Now that note don't taken into consideration. Are you really with me? Where the imposition of penalty is not for delay in payment of what tax? Sales tax or VAT or GST. But for contravention of the provisions of sales tax or VAT or GST law. The levy is not compensatory and therefore not deductible. However, if the levy is compensatory in nature, it would be fully allowable. Where it is a composite levy, the portion which is compensatory is allowable and that portion which is penal is to be disallowed. What they are trying to say is that penalty is there. No. Penalty if penalized in nature should be back. But if you are saying that, sir, there is only a delay in payment of GST, for that I paid interest. That interest will be allowed as a. So here we assumed that penalty is penalized in nature. Penalized means, sir, for example, I am traveling in a bike without having helmet. I have to pay the penalty. That will never be allowed as a deduction. Are you really with me? Sir, today I have to pay some tax, but I paid after 2 days. For the delay, I have to pay interest. That interest will be allowed as a. So in this note, they are saying that penalty debited to P&L account, we assumed as pure penalty for the contravention of the provision of the Act. Hence, it will not be allowed as a deduction. Inside that amount, if some amount is for contravening the provision and some amount is for the compensatory in nature, then that compensatory part would have been allowed as a deduction. But there is no compensatory part has been given in the question. Since the question only mentioned what paid, GST penalty paid, and reason for levy of penalty is not given, it is assumed that the levy is not compensatory and therefore not deductible. It is, however, possible to assume that such levy is what in nature and hence allowable as a deduction. In such a case, total income would be 3,94,500. Are you really with me? So you are having two options. You can assume that penalty is what in nature? Compensatory in nature. If penalty, if you are feeling it as compensatory in nature, it will be allowed as a. Whereas if the penalty is contravention for, sir, you are not following laws and regulations. Because of that only you are paying the what? Penalty. That can never be allowed as a. Are you comfortable? Are you able to appreciate this much big question from the profits and gains of business or profession? Moving to the last question, which is illustration number 10. Mr. T is engaged in composite business of growing and curing. That means further processing coffee in Coorg, Karnataka. So we are having three rules. Rule number 7A, rule number 7B, rule number 8. Rule number 7A, rubber. Rule number 7B, in that we are having two coffee, normal coffee, and what they are doing is they are just processing the coffee. The whole of coffee grown in this plantation is cured. Just they are curing. That means it's a what coffee? Normal coffee. The percentage for normal coffee is 75. If it is abnormal coffee, 60-40. Are you able to revise the provision? Relevant information pertaining to year under 31/3/2025 are given below. Opening balance of car, only asset in the block as on 1/4/2024, that is WDV as on 31/3/2024, minus depreciation for previous year is 3 lakh. So for that business, they were having a car. Yes, you can have car for a particular business, right, sir? Opening balance of machinery as on 1/4/2024, that is WDV as on 31/3/2024, minus depreciation for the previous year is how much lakh? 15 lakh. So they were having one more asset called as what? Plant and machinery. So one asset is car, another asset is expense incurred for growing coffee. How much they spend? 3,10,000. Expense for curing coffee. How much? Sale value of the cured coffee. How much lakh? So what you are supposed to do is you have to first take the sale. From the sale, without sir, growing the coffee, you can't cure the coffee. Correct? First reduce the expense incurred for growing coffee. Then reduce expenditure for curing coffee. You will be getting profit before depreciation. Then reduce depreciation on car. Reduce depreciation on plant and machinery. You will get the Pgbp income. That income is called as composite income. That income you have to classify into 75 and 25. Appreciate Pandani. Besides being used for what operation? Car is also used for Section 38. Asset used for both business and disallowance for personal use may be taken at how much percent? So 20% of the car has been used for personal use. So 20% of the depreciation of the car will not be allowed as a expense incurred for car. Running and maintenance are 50,000. Even on this petrol and running expense also only 80% is allowed. Because since the car is used for personal, 20% should be disallowed. The machines were used in coffee, curing, business, operation. Machine is pakka used only for the purpose of coffee. So there no implication of section 38. Compute the income arising from the above activity for the assessment year 25-26 is the question. Come on. Where an assessee is engaged in composite business of growing and curing of coffee, income will be segregated between agriculture income and business income as per rule 7b of the income tax rules. Right, sir? Because we are having rule number 7a, rule number 7b, rule number 8. As per the above rule, income derived from sale of coffee grown and cured by the seller in India shall be computed as if it were income derived from business, and 25% of such income shall be deemed to be income liable to tax. Why? Because what is the percentage? 75, 25. What is 75 represent? Agriculture income. 25 represent? Just now we discussed that agriculture income is fully exempted under 10.1. Correct? So this 75% don't pay tax. You are liable to pay tax only for the, that's what they are also saying. As per the above rule, income derived from sale of coffee grown and cured by seller in India shall be computed as if were income derived from business, and 25% of such income shall be deemed to be the income liable to tax. Because 75% are agriculture income, it is exempt income. The balance, how much percent will be treated as agriculture income. So can we calculate the composite income? What is the sale value of the cured coffee? Already given in the less expense for growing coffee, 3,10,000. Car expenses, actually they spend 50,000 rupees for the petrol, but entire 50,000 cannot be claimed as a 20% of the car expenses are used for personal. So 50,000 into 80% comes to 40,000. Are you really with me? Now depreciation on car. What is the block value of the car? 3 lakh. 3 lakh into how much percent? 15%. So you will get 45,000. But on that 100% depreciation cannot be claimed as a into how much percent? 80%. Come to 30. So total cost of agriculture operation is 3,86,000. How, sir? 3,10,000 for growing the coffee, 40,000 for car expenses, 36,000 for depreciation on car. Are you really with me? Now, expenditure on coffee curing operation, next stage. Okay, now you have drawn the coffee, then you are going to curing the coffee, next process. How much you spend? Depreciation on machinery. For curing the coffee, you are using a machinery, correct? What is the value of the machinery? 15 lakhs. Into how much percent? 15%. Don't apply 80% for that, because that machinery has been 100% used for the purpose of the business. There is no implication of section 38. Asset used for both what and what? Business and personal. So 15 lakh into 15% comes to 2,25,000 plus 3 lakhs comes to. That is the total cost of curing operations. Are you really with me? Total cost of composite operation. That means for growing the coffee, you spent 3,86,000. After you ground the coffee, for curing the coffee, you spend 5,25,000. Total you have incurred 9,11,000. Comfortable. That means, my dear lovable students, you are having an income of sale of 22 lakhs minus 9,11,000 comes to, sir, 12,89,000 is the what income? Composite income. This amount only has to be segregated in the ratio of 75:25. Are you all really with me? So, business income 25% of the above. So 12,89,000 into 25% comes to 3,22,250, and 12,89,000 into 75% comes to 9,66,750. Comfortable? That's it. Computation of depreciation. Can we compute depreciation? Yes, sir. We are having two assets. One is car, another is what? Machinery. You should be very clear and very careful, my dear lovable students. What is the opening balance of car? Already given in the question. How much? 3 lakh. Depreciation 15% comes to. But have you, sir, allowed 45,000 fully while calculating Pgbp? No, sir. Only how much is allowed? 80% is allowed. So calculator, 45,000 into 80% comes to. So you can reduce only 36,000. Are you really with me? As depreciation. That's why here we have reduced only 36,000. Ennapa comfortable appa? Yes sir, 36,000 is only claimed. Because provisions of section 38 will be applicable. What is section 38? Asset used for both. Coming to the next one, man, machinery. What is the opening value of machinery? 15 lakhs. Is this machinery fully used for business? There is no consequences of section 38. So 100% of the depreciation, can we claim it as a business expenditure, right? So 15 lakhs into 15% comes to 2,25,000. That's what we have claimed. And this explanation is there. Explanation 7 to 43 subsection 6. Can anyone say what is 43 subsection 6 at this point of time? WDV computation. How to compute the return down value. We are having that format, opening WDV, less. All this is explained in section 43 subsection. Provide that in case of what income? That means if the income is a composite income, for the purpose of computing what? Of the asset acquired before the what year? Total amount of depreciation shall be computed as if entire composite income of the assessee and not just how much percent is chargeable under the head profits and gains of business, or the depreciation so computed shall be deemed to have been actually allowed to the what? What they are saying is, how much is the depreciation? 45,000. Correct? Sir, when you are calculating the what WDV, closing WDV, from what is the opening WDV you are having? 3 lakh rupees is the opening WDV. Correct? Less what is the depreciation at the rate of 15% comes to? Entire 45,000 should be reduced while calculating the what WDV. Don't bifurcate this into 75 and 25% and all. Now you read it, man. That is explanation 7. There is one explanation called as explanation 7. To section 43 subsection 6 provides that in case of what income? Composite income. If you are calculating composite income for the purpose of computing return down value of the asset. So if you are calculating WDV acquired before the what year? Previous year. Total amount of depreciation shall be computed as if entire composite income of the assessee is chargeable under the head what? Pgbp. There you should not have an argument that, sir, only 25% is only going to be taxed under Pgbp and 75% is going to be taxed under IFOS. So when I calculate the closing WDV, I will split the total depreciation of 36,000 into what and what? 75% and 25%. Like this, you should not think. You have to assume that entire income is taxable under the head PG. Otherwise, if you reduce only 25%, you will be having more closing WDV. If you are having more closing WDV, next year you will be having more depreciation. Correct? So what Income Tax Act is saying that we will not allow. That 75-25 will be applicable only for the composite income, not for the depreciation. Are you really with me? That's a logic. So, and is chargeable under the Pgbp. The depreciation so computed shall be deemed to have been dash allowed to the assessee. Actually allowed to the. So, don't bifurcate the 36,000 into 75% and 25%. Because 36,000 is the actually allowed. Total 45,000. Hello, sir. But 36,000 is only actually allowed to the assessee. Actually, in this 36,000, 75% is IFOS. And 25% is business income. But don't have this view for the depreciation. Depreciation, you think that entire income is taxable under the head Pgbp. So you can claim the full 36,000. So automatically 3 lakhs minus 36,000 comes to 2 lakhs 64,000 will be the closing WDV. Are you all really with me? That's it. We have done with a gigantic, brilliant, super big chapter called as Profits and Gains of Business or Profession. Comes to an, along with all the illustrations of ICA and also the book back, my dear lovable students. I hope that you will be so much comfortable. Mainly with the book back, you should see that whether you are able to appreciate apply the provisions or not. Are you able to appreciate? Revise from start once again, then you will be having a fair level clarity with regard to the profits and gains of business or profession.